Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate jargon to unearth the real stories. Today, we're diving into Atkore Incorporated's latest announcement, which sounds like a strategic shift that might make some facilities a bit chilly. Imagine a company deciding to close down a few of its factories. That is essentially what Atkore Incorporated is doing, and we're going to break down what this means for them and for you. Before we dive in, if you're all about getting clear, no-nonsense insights from these official filings, make sure you're subscribed. And hey, we have a growing community on Discord where we chat about these companies and more. So link is in the description below. So Atkore Incorporated, ticker symbol a TKR on the New York Stock Exchange, has reported a significant operational decision. They've announced a plan to stop manufacturing at 3 of their facilities. Think of it like a company streamlining its operations, aiming to become more efficient and cut costs. This isn't necessarily a sign of trouble, but more of a strategic move to stay competitive in a changing market. Atkore Incorporated is a company that makes a lot of the stuff you see in buildings and infrastructure, particularly when it comes to electrical systems. They design, manufacture, and sell electrical conduit fittings and related products. So, when they adjust their manufacturing footprint, it's a pretty big deal for how they operate and manage their business. The primary driver behind this decision, as the company states, is to reduce costs. In today's business world, especially with fluctuating economic conditions, companies are constantly looking for ways to optimize their spending. Closing facilities means fewer overheads like rent, utilities, and potentially fewer employees at those specific locations, all contributing to a leaner operation. Now, when exactly is this happening? They plan to wrap up production at these 3 sites by somewhere around the end of the second quarter of their fiscal year 2026. This gives them a bit of time to manage the transition, which is important. It is not an overnight shutdown, which is usually a good thing for all parties involved. What does this transition actually cost the company in the short term? Atkore Incorporated is expecting to see pre-tax cash charges somewhere between $5 and $15 million. These charges are mostly related to the people involved, like employee severance packages and other costs associated with shutting down the operations. The good news is that most of these costs are expected to be paid out by that same target date, the end of fiscal year 2026. This suggests they have a plan to fund these exit costs without putting too much strain on their immediate cash flow. Now here's where things get a little less certain. While the cash costs are outlined, there is also the possibility of non-cash impairment charges. This can happen when assets like machinery or buildings at the closed facilities that are not being moved are no longer worth what they were on paper. The company is saying that they might have to take these charges, but they can't quite put a number on it yet. They've promised to update everyone if and when they can estimate these non-cash charges. This is something to keep an eye on, as significant impairment charges can impact reported profits. Like most corporate filings, this report comes with a section on forward-looking statements. This is a standard legal disclaimer basically saying, hey, we're making predictions about the future, but things might not turn out exactly as we say. They use words like believes, expects, and anticipates to signal these are their best guesses, not guarantees. It is their way of protecting themselves from lawsuits if actual results differ from what they're projecting. It's always wise to remember that the future is uncertain, and even the best laid plans can encounter unexpected hurdles. And the report is signed off by Daniel S. Kelly, who holds a pretty important position as Vice President, General Counsel, and Secretary. This means the company's legal and top leadership are aware of and signing off on this announcement. So let's talk about what this all means. Atkore Incorporated is taking a tangible step to become more cost efficient. Closing facilities is a common strategy for optimizing operations, especially when dealing with market changes or looking to consolidate production. The expected cash charges are within a range that suggests good financial planning, and the announcement of potential non-cash charges indicates they are being transparent about possible future accounting adjustments. The story here is one of adaptation. Atkore is not hiding from the need to change. They are proactively addressing costs by streamlining their manufacturing base. This move could lead to better profitability down the line if the cost savings materialize as expected. However, the uncertainty around non-cash impairment charges is a point to monitor. If these turn out to be substantial, they could temporarily dent the company's reported earnings, even if the underlying business is improving. Looking at the broader context, the manufacturing sector is always navigating shifts in demand, technological advancements, and global supply chain dynamics. Companies like Atkore need to be agile. This decision suggests they are indeed being agile. The key for investors and observers will be to see if these cost reductions translate into improved operating margins and continued market share. In conclusion, Atkore Incorporated is making a strategic move to streamline its operations by closing 3 manufacturing facilities. This is aimed at reducing costs and improving efficiency. While there are some upfront cash costs involved, they seem to be within a manageable range. The company is also acknowledging the possibility of future non-cash charges, which we will be keeping an eye on. Overall, this appears to be a proactive step towards a leaner, potentially more profitable future for a TKR provided they execute the plan effectively, and the market continues to support their core business. What are your thoughts on this operational shift by Atkore Incorporated? Do you think this is a smart move for the company's future, or are there hidden risks? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up, and make sure to subscribe so you don't miss our future dives into corporate filings. And don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching, and we'll see you in the next one.